Okay, welcome to Rocket Solutions International Training Module number 1. This is going to be regarding the Rocket Solutions International Agreement. I'm going to go over it with you. First of all, welcome aboard. If you've signed it, you're part of Rocket Solutions International. And I am going to talk about our compensation plan first of all. First of all, you understand for every terminal you're paid $300, whether you lease it or you sell it. They are 100% tax deductible versus the banks that rent them. They are not tax deductible. The the next thing as far as compensation, the compensation cycle works like this. As far as your pay, all the sales that you make up until Friday 5 p.m. of a week, you are paid out the following week by Friday 5 p.m. It is sent to you by electronic means or by wire. For international representatives, or SAMs as we call you, sales account managers, your funds will be wired to you, usually in US funds when the US dollar and Canadian dollar are close. If you sell 1 to 9 terminals or lease them, you're paid $300 a terminal. 10 to 19 terminals is paid out at $400 a terminal, and 20 and above is paid out at the rate of $500 a terminal. If you recruit somebody, that means somebody signs the Rocket Solutions International Agreement. You keep a record of the first and last name, and you will get a sales tally sheet every week of all the reps on it. You'll be able to see what your reps are doing. You earn a $100 override on each sale that your reps achieve, and also sales that your reps achieve help your sales volume. So for example, if you have a rep that you referred and they achieve 5 sales and you do 5 sales or leases, I will treat and pay your 5 leases or sales as if they were in the next category. You receive $400 a terminal instead of $300 a terminal, and you will also receive your $100 override on each one of their terminals. For training purposes, we're also going to talk about the terminals, the first 3 terminals on your Rocket Solutions International Agreement. On the Rocket International Agreement, you see the Ingenico 5100. This includes a pin pad. It's both a dial-up and a high-speed terminal. It sells for $1,495 Canadian plus GST and PST. These are 2 taxes that we have here in Canada. Or it leases for 48 months at $49.99 plus the taxes. Either way, like I said, it's tax deductible, and the commission to you is $300 or more. This terminal is both high-speed and dial-up, so if the person is up on a dial-up service right now, on a telephone service on their terminal, this will work for them. If they're on a high-speed, again through a phone line or through a cable coaxial, this terminal will work for them. This terminal comes with lifetime warranties and guarantees and free upgrades both by Rocket Solutions International and by Elevon. Either way, whether they purchase them or lease them, long as they remain with Rocket Solutions International. This terminal, the Ingenico 5100, comes with the 3050. You do have the electronic brochures for both of them, and I want to stress that the 3050 is not a terminal, it is just an accessory to the 5100 and only comes with the 5100. The 5100 is the workhorse for companies, and it does their Visa, MasterCard, American Express, and debit processing. The next terminal we're going to talk about is the short-range wireless. This is a terminal that sells on the Rocket Solutions International Agreement. Again, you see it at $16.95 plus taxes, or it leases for just 48 months at $52.99. This is like a cordless phone and will work inside a restaurant or on its patio. The next terminal we're going to talk about is the long-range wireless terminal, the Hypercom 4230, and this terminal sells for $17.95 Canadian plus the taxes, or $55.99 a month a lease, and it is for all intent and purposes, a cell phone. It does come also, it needs a data package, and the data package is a flat fee of $15 a month with us as compared to our competition that gives a $20 a month data package and something like a 10-cent transaction on every transaction, in addition to all other transaction fees, and that adds up very quickly for somebody taking the data package from one of our competitors. The terminals and the processing always comes together. We only lease or sell terminals, as opposed to our competition which, like Moneris, the #1 company out there, which controls about 50% of the bank and of the business out there, they are controlled by and owned by the Royal Bank of Canada and the Bank of Montreal. The second largest company in the processing business is TD Visa, and they're controlled by the TD Bank. These two companies alone control over 75% of the business, and they only rent their terminals, and they charge higher processing rates than us. We both lease and sell terminals at 100% tax deductible. You do have benefit sheets, you have example sheets. All these sheets lay out for you the superiority of our company over the banks. The next company out there is Chase Payment Tech. They control about 10% of the business, and they both lease and sell and rent terminals. If somebody has just purchased their equipment, obviously would be a hard sell for them to take on more terminals when they don't really need the terminals, even though the terminals are effectively cash neutral, because they are 100% tax deductible when you're looking at a lease or a purchase. So we've talked about the 3 terminals. We've talked a little bit about the marketplace. As far as customers out there, customers for you out there in the marketplace basically fall into 3 categories. People that already have terminals and they're renting them. We want to replace them with the advantages of purchasing or leasing the terminals, and also obviously always bring down their processing rates, which I'll talk about subsequent in the next training module. The other kind of customers that you find in the marketplace are customers that they've been in business for a long time but haven't accepted Visa, MasterCard, American Express, and debit cards like bank cards. Those kind of prospects, there's no reason why they shouldn't start accepting these type of cards and increase their business by 10 to 30%. It's easy to enter in the market for them for $49.99 or $52.99 a lease. They could be up and running in 3 to 5 days from when they sign the application with you. They receive their terminal or terminals, and they're up and running. We are selling primarily small to medium-sized businesses all across Canada, and you are selling 1 to 10 terminals or leasing 1 to 10 terminals. We'll get into the different payment modes and filling out an application again, and probably in module number 3, the final module, or 2. Finally, the third type of customer you have out there is a new business, so they don't have terminals. They haven't been in business, but they're getting up and running. You can again find leads for all these different categories are all available on the internet today. Businesses, small and medium-sized businesses in Canada are available through the net yellow pages. All the small and medium-sized businesses from coast to coast. You can sell any small and medium-sized business anywhere in Canada. We will be opening in the United States to you if you're successful in Canada after 3 to 6 months. But the Canadian market is really the easiest market for somebody to learn how to sell point-of-sales terminals. Finally, we will enter into the next module and talk about, again, the discount rate is important, and how to fill out an application, which is most important. So we'll stop this module here, and then we'll look for module 2 to continue your training.